Utah County, here's your monthly market update from January of 2023 to February of 2023. Now, we're also going to take and compare numbers going back from 2022 to show you the differences of what's taken place there. In this time last year, the average days on market was 22 days, but the average days on market today is 61 days. The average list price was $550,000, and then the average sold price was $555,000. So homes are selling about $5,000 above asking. And the total number of sales in that last 30-day period was 700. Now, if we look at the average list price now, we're at $564, and our average sold price is at $555. But the total number of sales has dropped to 481. So to understand the data, we need to see what was leading up to this time last year. January was starting to pick up a lot of traction, and then February was insane. March was crazy. April was also crazy, but that's kind of where it peaked. In that ramp up, homes went up almost 20%. But throughout the year 2022, homes started to decline after about April or May, and they continued to decline going into January of 2023. But that's where we started to see the market catch its feet again. And although we're nowhere near the craziness that we've been seeing the last 3 or 4 years, we are starting to see the market stable out. But again, based on the numbers that we looked at, it's stabling out. It's not ramping back up. And the biggest question is, what does that mean for you? For sellers, you need to have a more realistic expectation whenever you come and list your home. You want to make sure that you don't price it too high, and at the same time, you want to make sure that you don't price it too low. A lot of the buyers are looking for a good deal. So if you price it too low, you might not have multiple offers to bump it back up to market. And if you price it too high, your home can start to get stale on the market, and then you're always chasing behind the market. But you also have to realize that your home doesn't sell as quickly. For example, the last 4 years, if your home wasn't taking and it wasn't getting a lot of action the first week and a half, then it was like, hey, we need to make a price drop very quickly. And that was caused by the amount of buyers that were in the market. Because we had so many, it was very easy to get a lot of data back on, hey, what does the market want? What do the buyers want? So we can adapt it very quickly. Now, with less buyers in the market, the data comes back a little bit slower. So you don't want to jump the gun and adjust price too quickly. Now, for the buyers, we're in a little bit of a different environment. So yes, you can usually negotiate and get a little better deal on most of the houses that you see, but some houses are still getting multiple offers and they're moving very quickly. And over the last month, I've looked at hundreds of houses and I've tried to figure out what's the it factor associated with those things. And to be honest, it really varies. Sometimes it's happening with newer houses that are really pretty. Sometimes it's happening with older houses that need a lot of updates, but are priced competitively. And sometimes it's happening with houses that are unique. Say, for example, it has a mother-in-law apartment that could be used as a rental. But the biggest benefit is now you actually have choices. There's actually a survey done, and more than 60% of the people who bought a home in 2020 were unhappy with the home that they ended up purchasing. And that's because the environment was so competitive that you just got into whatever house that you could. Now you can take a little bit longer, shop it out, and make sure that you're getting into the right house for you and your family. Now your rate will end up being a little bit higher, but you are able to pay less for that house. Probably the biggest it factor associated with that as well is now you can go in with less money down. You see, again, over the last 3 or 4 years, if I liked the house, I had to not only offer above asking price, but I usually had to pay for closing costs as well, and then usually a gap fee between how much the house would appraise for and how much my offer was. So if I'm buying a $500,000 house, I could be paying 5% down, $6,000 in closing costs, and then another 20 grand in an appraisal gap, which put my cash to close around 50 grand. But in today's market, you can usually get away with just doing your down payment. A lot of times the seller will offer to pay for your closing costs, and you don't have to pay for any gap fee and appraisal. And now to my favorite part, investors. There's definitely some golden opportunities that we're seeing now that we haven't seen in a long time. And because of the low rates and the rising prices that we had seen over the last couple of years, you have unique situations that people have very, very low interest rates. So now we're structuring a lot of deals that are subject to or seller finance, which allows you to take advantage of the lower prices now, but still be able to acquire the low interest rates that we've had in the past. So with all that being said, I know the news is always talking about the bad news and everything bad that's going to happen. But to be honest, I think today presents a lot of unique opportunities that we haven't had in the past. And if you structure things the right way, you can win more in this market than we have been able to over the last 5 years. But I'm curious what your thoughts are. Tell me what you guys think is going to happen in the market over the next couple of years.